In today's video, I'm going to be doing a deep dive and overview of our $140,000 Canadian-based stock portfolio with Wealthsimple Trade. And one of the best things I love about dividend investing is the fact that you can earn income while you sleep. One of the best things about this portfolio, and one of the things that has made this journey easy for us and let things to compound and grow, is letting those dividends grow on a regular basis. Making money while you sleep is one of the best things you can do. It's one of the smartest things you can do, and anybody can get started with it. And it doesn't matter where you are, even if you're a complete beginner, you guys can benefit from investing in dividend stocks. In fact, take a peek at this graph if you guys don't believe me and look at the value of these dividends growing over time. We first started with a couple bucks, but if you guys work at it, you guys will get better, things will improve, that snowball will start to grow, and you guys will start to see some success. So before we get started and we go any further in the video, I just want to say really quickly, guys, if you guys enjoyed this video and you guys want to support the channel, be sure to smash the like button. It really helps out. And if you guys want to see more updates and be a part of this channel and this community, be sure to subscribe to the channel. And I do have a quick announcement for you guys. I've decided to open up a Discord private community of beginner-based dividend investors for Canadians. There's a link in the description of this video if you guys want to sign up for the Discord. It's very new. It's very early. There's only 50 spots open currently right now because I am testing some things out. But if you guys want to be a part of this, you want to get early access, and you guys want to talk with me and chat with other members of the community, check out the link to the Discord in the description of today's video. Alright guys, enough chit chat, let's jump inside the portfolio and I'll show you guys how our stocks have been doing for the past month. So because one of the most helpful things I think you can do as a beginner is kind of see the process of growing an account, I like to do these monthly updates to kind of give you guys a deep dive inside the portfolio. So the first thing we're going to do really quickly is going to give you guys an overview of all of our accounts. And the first accounts we have is my own personal accounts on Wealthsimple Trade. These are the big ones I've been growing over the past little while. So we have $118,000 in total in Canadian for all these portfolios. And the three main portfolios we have are the RRSP, the non-registered personal account, and as well as the TFSA, and the TFSA is the biggest account by far, making up about $110,000 in the TFSA itself. And in case you guys are wondering what that noise was in the background, if you guys just watched this video, that's actually my cat Cooper scratching in that box. You guys might see a box in the corner of my videos. I bought a workout bench a long time ago, and I had this long box, and I noticed that he liked to play in it and scratch it, so I kept the box in the living room, and he likes to scratch it and make noise. So I do apologize about that, but in case you guys are wondering if there's something around you, it's not on your end, it's on my end. It's my cat Cooper playing in the box, scratching, having a good old time. So anyways, let's get back to the video. And one of the best things you guys can do if you're a beginner to make things really simple for you, pick a solid goal to achieve, is to max out your TFSA. Make a project, make a goal to max out that TFSA. That's one of the best things you can do. That's kind of basically what I did when I first started, and it kept me busy and it kept me going. So the TFSA has actually been doing quite well. We'll do a quick little update of it over the past little while. So the 1 week return for the TFSA is now -1%. We did see a bit of a dip in the markets, mostly in the Canadian markets over the past week. The 1 month return for the TFSA, however, in total is actually in the positive. And a lot of that came at the start of the month. That's about a 2% gain, $2,000 or so. And the 1 year return for our TFSA is about 8%. And then all time, the TFSA is up 17%, which is $15,000 tax free. So that feels pretty good. It's definitely been doing really, really well. And it's a nice split account. It's got 50% American stocks, 50% Canadian stocks. And once again, like I mentioned earlier, I will be doing a deep dive inside our portfolio and all of our stocks towards the end of the video. If we head on over to passive, we can see an overview of all of our accounts together. So I already talked about a couple of the ones that I hold inside my own portfolio. That's the personal account, the TFSA, and the RRSP. The other one I didn't mention here is my fiance's TFSA. She has a TFSA about $22,000. Hers is not maxed out, so it's kind of cool. We're kind of starting over from the beginning. Our new goal is to max out her TFSA, right? One simple goal, one simple objective. It's an easy thing to do, and every single day, the only thing I have to worry about is maxing out our TFSA. So any free cash we have goes inside her TFSA, and again, the value is $22,000. We have tons of room to work with, but here's our total portfolios added up together. So here's where we get that $140,000. It's all of our accounts added up together. And we're going to head on over to the reporting tab inside passive to get some cool little insights into how our portfolio has been performing year to date. So here we have the contributions and withdrawals, so we can see how much money we're putting inside the portfolio on a regular basis. So in January, we had some pretty big months. In March, we took out a lot of money to help pay for taxes. And then in May, we also took out a little bit of cash. June was a good month for us. We put $2,000 and $300 inside the portfolio. I'm actually quite surprised at the number, to be honest with me. That seems pretty high. But once again, we did have a little bit of free cash. And in July, we also had a pretty good month too. So last month was a pretty good month for us. That's $1,450 we put inside the portfolio. And I know what a lot of you guys are thinking if you're watching this video, you know, those are some pretty big numbers to contribute, but honestly guys, it didn't start out this way. In fact, you guys don't have to be super hardcore like that. That's just me aligning with my goals. My goals are to save up as much money as possible, get that snowball going as quickly as possible. You guys don't have to be putting insane amounts of money into the market. Everybody's going to be at a different starting point, and even just putting something like 50 bucks a month, 20 bucks a month, whatever you guys have at the end of the day is going to get that snowball rolling, and it's going to work for you. It's all about growth, and everybody's going to be at a different stage in life, and they're going to have different goals. So, you know, you guys might see my amounts and it seems like a lot, but man, guys, we've been doing this for a long time. We have a lot of experience, and we have some pretty hardcore goals. Like, we're hardcore here. So don't feel bad if you guys are hitting that. Don't compare yourself to others. Compare yourself to yourself and where you were before, and focus on growing over time. Now, here's a cool little chart that shows how our portfolio has been growing since the beginning of the year. So at the beginning of the year in 2023, January 1st of 2023, we had about $117,000 saved up. And if we fast forward all until now, we've seen that our portfolio has grown with our contributions, as well as the markets increasing, and as well as our dividends being reinvested, which is an important thing. We do focus lots on dividends, and we do reinvest those inside our portfolio to get that compound growth. We hit a goal of, we almost hit our goal of $150,000. That's 141 in total. So we're slowly getting there, guys. I think we can hit 150,000 by the end of the year if we really work hard at it. But once again, it will kind of depend on the markets. And the funny thing about the markets over the past little while is markets have been quite interesting. We have the US stocks, you know, like the US markets doing quite well. We've seen a lot of growth in the US markets, actually doing quite well year to date. If we take a peek at the graph here, we can see the S&P 500 is up quite a bit, and Canadian markets just haven't really, they've been okay. You know, if you have some dividend stocks, you might be looking at a decent return with those dividends compounding growing, but in terms of stock growth, not too much is going on, and most of that is because of the interest rates, right? We have with high interest rates, you know, everything's going up and expensive. It's getting harder for companies to borrow money. So I think in the Canadian economy, it's struggling a little bit, but the good news is, you know, over time, things are going to balance each other out. That's why we have a nice diversified portfolio. And using this example, this is why I always recommend that you guys have some type of balanced portfolio. You know, I like to have almost like a 50-50 split with Canadian and US stocks. You guys can decide what is right for you, but I always recommend a diversified portfolio just so you guys can take an advantage of when, you know, the US stocks are doing good and the US and the Canadian stocks aren't doing so well. You can kind of take advantage of the differences, and your portfolio is not going to be like kind of all over the place. Here's the dividend history for the accounts since we first started here. We'll go over since the beginning, and here's a nice color-coded pattern so we can see all the different stocks with the different color codings here. It's kind of cool. You can see the different stocks and the dollar amounts. So in January, we had $560. It was a big month. You know, it's the start of the year. We got those quarterly payments going in, so it was a pretty good month. February and March are more of our regular income months. We don't have the big ETFs paying out, so we're hitting more of our normal dividends, right? So $250, $300. April was another big month. Once again, those quarterly dividends coming in, and then May and June kind of settling down a little bit, but still we've seen a little bit of growth, and then July being our biggest month by far inside the portfolio, hitting $651 in total dividends. And here's a neat little graph that actually shows you guys where our dividends are coming from our ETFs. So if you want to focus on dividends, you know, we're dividend investors. We like that income coming in. We have a few dividend funds and a few dividend stocks. Our portfolio is kind of a mix between growth and dividends, but you guys can see the big companies or the big ETFs that are paying out our dividends. We have ones like VDY, for example, for this year paying us a total of $946 in dividends. HLD being our cover call ETF, our second highest paying ETF with $800 in dividends. And then we have VFE, which is the S&P 500, giving us $652. And then going downwards, we have some individual holdings. I got some individual holdings in my personal account, my TFSA, as well as my RSP. You know, and a lot of these smaller ones at the bottom it's not a lot of money, but it does add up, and you know, they compound and grow together. And there's something special about getting dividends on a regular basis. One of the things I love is checking my bank account or getting an email from Wealthsimple Trade, pinging me, letting me know that I'm getting dividends. And it's such a cool feeling to see those dividends kind of piling up, even if it's just a couple bucks here or there, a couple bucks there. You know, it adds up at the end of the day, and it really does make a big difference. So I'm a big fan of dividends. I know some people call me biased and they say things like dividends don't matter and whatnot, but I'm here to tell you guys, depending on your goals and who you are as a person, and since we're all human beings and we have emotions and stuff like that, I think dividends make all the difference in the world. So once again, different strokes for different folks, but honestly guys, I just love dividends. There's something special about it, and I like going to the store, grabbing a cup of coffee or something, using my dividend income. It just feels so good. And as I promised guys, here's the total return of all of our stocks year to date inside our portfolio. So on this page, we can see the revenue plus the total gain of all of our stocks here. So the revenue here is going to be the distributions for each funds. I know a lot of you guys ask me for the individual dividend income from all the stocks that we hold. Well, here's the tab where you guys can see it, so you guys can pause or kind of go through this part of the video. I'll go kind of slow so you guys can follow along here, but feel free to pause or slow down the video if you guys want to kind of take a peek at these numbers. And the number on the right side here is going to be the total gain in the dollar amount as well as the percentage here. So we have the dividend income here in this column, we have the total gain, which is stock growth plus dividends, and then we have a percentage here of the total gain as well. So VFB, we got $1,500 in dividends, that's distributions. And then we got the $7,000 in total gain, and that represents a 12% increase inside of our portfolio. And you guys can just scroll down here to see the different stocks we hold. So once again, the dividend stock is going to be higher on revenue, giving us some nice little distributions on a monthly and quarterly basis. And then we have the total gains here. So most of our stocks are doing pretty well. The big ones I want to highlight here that basically have changed a little bit are Algonquin, is still down quite a bit since its dip happened earlier this year. And then we have TELUS. TELUS actually went down quite a bit. The telecommunications stock is actually struggling a little bit. Interest rates are pretty high. The company has struggling a little bit with its cash flows. It's kind of in an interesting position. I haven't bought too much myself other than the odd share here and there just because I haven't really been focusing on it, but it might be a stock to look at. I'm not too sure. I need to kind of dive in a little bit, but traditionally TELUS has been a great company. It's been a good stock I've always liked, so I'd imagine it's a good time to buy the stock. And again, I've been buying a few shares here and there, and it is in my big ETF, so I'm kind of investing into it indirectly, right? But going downwards here, we have some other ETFs here, and once again, I just want to remind you guys that this is all of our stocks added together. So this is including my fiance buys as well. It takes all the accounts together and it gives us an average of what our average price points out here. So once again, we have FTN, or financial covered call, not covered call, split share fund. That's high yield distribution based. We have the Fortis, which is a defensive utility, and then we have other stocks like POW. POW's kind of jumped up a little bit. Some of the Canadian ETFs have dipped down a little bit, but that's kind of what happens. And then CNQ and Canadian Tire are doing quite well. So just a little quick recap on the individual stocks and what's actually contributing to the overgrowth of a portfolio, as well as some stocks that are struggling, because you're going to get some stocks here and there, and not everybody's perfect at doing this stuff. That's just the way it goes. So you'll learn from your winners and you learn from your mistakes as well. Alright guys, that's it for today's video. So like usual, let me know what you guys think in the comments if you guys have any questions or anything like that. If you guys enjoyed the video, give it a big thumbs up. And once again, subscribe to the channel if you guys want to see more content that's focused around beginner-based Canadian dividend investors, or just investors in general. I'm kind of rebranding the channel to be more beginner focused. So if you guys are beginners, you guys are just getting started, there's tons of content I already have out there, but expect a lot of content to come out in the future, especially if you're just, the basic stuff, just getting started out. That's kind of the person I am, and that's the kind of channel this is. So that's the way the content's going to be. So anyways guys, I'll see you guys in the next video. Take care, have yourself a good one, and see you later.